All right, let's dive in. Today, we're tackling something I know a lot of you have been wondering about. What happens to Bitcoin when all of it is mined? That 21 million coin limit,
Yeah, it's a question that comes up a lot.
makes sense, right? It's a pretty unique aspect of Bitcoin. And to help us unpack this whole thing, we've got a really interesting article someone sent over. Bonus points for being in Italian.
Oh, fantastic.
But don't worry, we've got it all translated. And it really digs into this scenario where all the Bitcoins are mined out.
It's a great article, gets right to the heart of what sets Bitcoin apart from, our everyday currencies.
Exactly, that whole finite supply thing. It's a real head scratcher for a lot of folks. In fact, the article starts off with this bold statement. When all the Bitcoins are mined, nothing apocalyptic will happen.
Haha,
I'll admit I was a little relieved to read that.
I think a lot of people picture like this sudden crash or the whole system just shutting down. But the article emphasizes that Bitcoin just keeps on working, even without new coins being created. It's about securing those transactions, making sure everything is legit on that decentralized ledger.
Okay, that makes sense. But then I started thinking, wait a minute, what about the miners? What keeps them incentivized after 2140 if there are no more Bitcoins to mine?
That's the big question, isn't it? And the article tackles it head on. It points out that miners will still be getting transaction fees from users, even without those block rewards.
So kind of like a small fee for processing those transactions on the network, right?
Precisely. Like when your bank charges a little something for transferring money, the miners are providing this essential service, securing the network, validating transactions, and those fees are how they get compensated.
Makes sense. But will those fees be enough to keep the miners engaged?
Well, that's where things get really interesting. The article suggests that Bitcoin's value is expected to be so high by then, we're talking over a century from now, that even those transaction fees will be quite lucrative.
So basically, because there are only 21 million Bitcoins ever, that scarcity will drive the value up over time, making even small fees worthwhile.
Exactly, and this leads to a fascinating concept the article dives into, halving. Basically, every 4 years or so, the reward for mining a block of Bitcoin transactions gets cut in half. It's how the system controls the rate at which new Bitcoin enters the picture.
Okay, trying to picture this. What does halving look like in practice? How does it actually affect Bitcoin's price?
Well, looking back, each halving has been followed by a pretty significant surge in Bitcoin's price. It's like the market anticipates this reduction in new Bitcoin coming in and reacts accordingly.
Interesting. So even though we're ages away from that last Bitcoin being mined, this halving mechanism is already making a difference, like a built-in countdown timer, adding to the scarcity.
Right. Every halving is a step closer to that final 21 millionth Bitcoin. And as we inch closer, the article suggests that Bitcoin's role could change drastically. It even throws out the idea that it could become a major player in the global monetary infrastructure.
Whoa, that's a bold prediction. Are we talking about Bitcoin replacing the dollar, the euro?
It doesn't go that far, but it highlights Bitcoin's decentralized nature, that fixed supply, as potential advantages compared to traditional government-controlled currencies.
That's a stark contrast. So we've got these government-backed currencies, potentially printed endlessly, and on the other side, Bitcoin with its fixed supply and independent network.
It's a fascinating dynamic, and that's just one of the many thought-provoking ideas this article explores.
I'm sensing a real paradigm shift here, like we're seeing the early stages of something truly groundbreaking.
It's an exciting time to be following Bitcoin, that's for sure.
Absolutely. But before we get too far ahead, maybe a quick reminder for everyone. What exactly do we mean by fiat currency?
Of course, fiat currency is essentially any currency declared legal tender by a government. Its value isn't tied to any physical commodity, like gold. It's all based on trust in that government.
So it's like a promise from the government that this paper, or the numbers in your bank account, are worth something.
Exactly, and that system has worked more or less for centuries. But this article highlights some potential drawbacks of fiat currency, especially in light of Bitcoin's rise.
This is where it gets really interesting. Bitcoin with its fixed supply, running independently of any government, versus fiat currencies, subject to inflation, manipulation, and all sorts of risks.
It's a striking comparison, raising profound questions about the future of money. The article even touches on Bitcoin potentially empowering individuals, giving them more control over their finances.
Okay, we've covered quite a bit. Bitcoin's finite supply, those miners in 2140, the whole halving mechanism, and now this contrast with fiat currency. It's a lot to absorb, but I'm already feeling more confident about what happens when that last Bitcoin is mined.
That's great to hear, and believe me, we've just scratched the surface.
Let's keep digging.
It's really fascinating to consider Bitcoin as a potential alternative, to the fiat system. But it's important to remember, we're not just dealing with tech here, we're talking about human behavior, how people actually interact with this stuff.
Right, that's a crucial point. Even with all its potential upsides, Bitcoin is still, well, kind of niche. So how do we bridge that gap? How do more people get on board, really understand and start using Bitcoin?
Well, the article digs into the importance of education, making it accessible, making it easier for folks to learn about it, get their hands on some, and actually use it in their daily lives.
Makes sense. It's got to be about showing people how Bitcoin can benefit them directly, not just throwing technical jargon around.
You got it. The article uses remittances as an example. Imagine sending money to family overseas, like instantly, with minimal fees, completely bypassing those traditional banking systems. That's a use case that could really resonate with a lot of people.
I see what you mean. It's about financial inclusion, too, giving access to those who might not have it otherwise. But, a lot of folks are still hesitant about Bitcoin, right? They worry about the volatility, the hacking risks, the lack of government backing.
Those are valid concerns, and the article acknowledges them. It recognizes that Bitcoin's still relatively young. There are wrinkles to iron out. But it also points out Bitcoin's constantly evolving. Developers are working hard to make it more secure, scalable, and user-friendly.
That's good to hear. It's not just some static thing, right? It's dynamic, constantly being refined and improved.
Absolutely. Which it brings us to another key factor the article highlights: regulation. Governments, central banks all over the world are trying to figure out how to deal with Bitcoin and all these other cryptocurrencies.
It does feel like a bit of a Wild West out there right now, with every country taking its own approach.
Exactly. Some see Bitcoin as a positive force, embracing its potential for innovation, economic growth. Others are more cautious, worried about its potential to disrupt the existing financial order.
So it's not just the tech itself, it's how it fits into the bigger picture. We've got this interplay of technology, human behavior, and regulations, all kind of coming together to determine Bitcoin's future.
It's like a massive experiment unfolding in real time. And as the article points out, there's no guarantee how it'll all play out.
That's both exciting and a little nerve-wracking. We're talking about a potential paradigm shift, the way we think about money, value itself.
Huge implications, and I think the article captures that well. It even delves into the philosophical side of Bitcoin, making us rethink trust, decentralization, how tech impacts our lives.
The article mentions Satoshi Nakamoto, the mysterious creator of Bitcoin. Makes you wonder what they'd think about how it's all evolving today.
Satoshi's true vision remains a mystery, but we can analyze the Bitcoin white paper, maybe glean some insights from that.
Like a digital age treasure hunt, trying to decode those clues left behind. But speaking of clues, the article does hint at some potential downsides to a Bitcoin-dominated future.
Right, gotta keep things balanced. Can't ignore the risks and challenges. One big concern is that volatility. Bitcoin's price swings can be wild, making it tough to use as a stable currency.
True. Can you imagine trying to buy groceries when Bitcoin's jumping 10% in a day?
Chaos. There are also those concerns about security, scalability. Can the network handle a big jump in transactions? What about hacking or fraud?
So it's not all sunshine and roses. There are real hurdles to overcome before Bitcoin goes truly mainstream.
Definitely, but I think the article does a good job presenting a balanced perspective, recognizing the potential, but also acknowledging the pitfalls.
So where does that leave us? We've talked about the tech behind Bitcoin, the people using it, the regulations it faces, and the potential risks involved.
And I think the big takeaway is that Bitcoin's future is still being written. It's a journey of exploration, innovation, and ongoing debate. How it all unfolds depends on a whole bunch of factors, like tech, regulations, human behavior, even global events.
When we started, I was fixated on that year, 2140, when the last Bitcoin is mined. But this conversation has broadened my view. It's not just about that endpoint, it's about the path we take to get there.
I love that. And speaking of the journey, the article subtly hints at another critical aspect we haven't even touched on yet.
Oh, a cliffhanger. Okay, I'm hooked. What's this crucial aspect we need to explore? You had me on the edge of my seat there. What's this crucial aspect we've missed?
Well, we've talked about the technology, the regulations, even human behavior, all these forces shaping Bitcoin's future. But there's another big one at play. Energy.
Energy. You're talking about the energy consumption of Bitcoin mining, right? I've heard that brought up before, often not in a good way.
Exactly. And the article doesn't shy away from it. It acknowledges that, yeah, Bitcoin mining takes a lot of computing power, which means energy consumption. It's become a sticking point for some critics who say it's just not sustainable, even harmful to the environment.
That's a valid concern for sure, especially as we're all becoming more aware of climate change and the need to be, well, more responsible. But how does the article address that? Is it all doom and gloom?
It actually encourages us to look deeper. It points out that not all energy is created equal, right? The source matters. And more we're seeing Bitcoin mining operations powered by renewable energy.
Oh, really? I have to admit, I always assumed it was mostly fossil fuels.
That's a common assumption, but some studies suggest that Bitcoin mining might actually be encouraging the growth of renewable energy infrastructure.
Now that's interesting. How so?
Well, think about it from a miner's perspective. They're always looking for the cheapest energy to run their operations, and renewable energy sources are getting more and more cost competitive with fossil fuels. So there's this built-in incentive for them to go green, so to speak.
So Bitcoin mining could actually end up pushing us towards a more sustainable energy future. That's not what I expected to hear.
It's a possibility the article highlights. And it's not just about where the energy comes from, it's also about improving the mining process itself, making it more efficient. We're seeing innovations in the hardware, the algorithms, all designed to reduce the energy needed to mine Bitcoin.
So a two-pronged approach, switching to renewable energy sources and making the technology itself more energy efficient.
Precisely. And I think that's a key takeaway from the article. It's not about ignoring the energy issue. It's about having a more informed conversation, recognizing the complexity, and exploring those potential solutions.
It's like any technology, right? It can be used for good or bad. It depends on how we choose to develop and use it.
Exactly. And I think the article leaves us with this sense of cautious optimism. The energy footprint is a real challenge, but it's also an opportunity to push for innovation and create a more sustainable future.
Wow, this deep dive has been quite a journey. We started wondering what happens when all the Bitcoins are mined. And we've ended up exploring the entire financial system, the evolution of technology, human behavior, and even the future of energy.
It's amazing how one question can lead us down so many paths, and I think that speaks to the power of Bitcoin. It's not just a digital currency, it's a catalyst for change, a new way of looking at the world.
I couldn't agree more. So as we wrap up this incredible deep dive, what's the one big takeaway you want to leave our listeners with?
I think it's this. The future's uncertain, and that's okay. Bitcoin's journey is full of possibilities, challenges, and surprises. And the outcome of this grand experiment is something we all have a role in shaping.
That's a great point. To everyone listening, thanks for joining us on this deep dive. Keep exploring, keep asking those tough questions, and keep forming your own opinions. The future of Bitcoin is a story still being written, and your perspective is a valuable part of that story.